This meeting is being recorded.
Okay. Hello, everyone. So we're just going to give more, maybe like 1 to 2 more minutes so that more people can join in, and then we'll get started right away from there. Okay, I think we'll get started now, and then other people can join in a bit later. So welcome everyone to session 3 of the student-led webinar series. So this is a summer series led by Wise Youth Organization, which is a financial literacy focused youth-led organization. And we're pretty globalized. So today we have our speaker, who is one of our team members, Ansika, and she's going to be going over a bit about banking and some finance skills. So just briefly talking a bit about previous webinars. So for our first session, we talked a bit about budgeting, and then last week we had our cybersecurity session. So for today, we're going to be talking about banking, more so focused on the banking aspects and the financial aspects. And before we get started, I just want to briefly talk about some of the notes for today's webinar. So today, the formatting will be a 30 to 40 minutes presentation style, which will be led by Ansika. And then at the end, we're also going to have a short Q&A section. So you can use either the Q&A box, which is the feature below that Zoom has, to ask some questions throughout the webinar, or you could also feel free to use the chat box to ask questions directly. And I know that Ansika is going to have a few questions for you guys throughout her presentation, so feel free to use the Q&A box throughout the webinar for that as well. Also, a note is that this webinar is recorded. So for your friends or family members who you know weren't able to make it today and would like to have a copy of this just for their information, or they're interested in this, it will be posted on our website after today's webinar, and also will be posted on our social medias. So you can look out for that information as well. Yeah, so that's it on my end. And now I'm very happy to introduce Ansika, who will introduce herself as well and start her presentation. So thank you guys so much for coming today, and I hope you enjoy.
Hi guys, my name is Ansika Mandipudi. I live in Austin, Texas. I'm going to be a sophomore next year. This presentation is going to be split into 3 parts. So before each section starts, I'm just going to give a pause for a few minutes to see if there's any questions in the Q&A box, and I'll answer them. Yeah, so let's get started. At the end, we also have a quizzes, so please do stay until the end. Okay, let's get started then. Okay, so understanding banking and finance. So as I mentioned before, this is our agenda. We're going to start off with basics of banking. Next, we're going to go to taxation and financial institutions. Then talk about your credit score, how to build it, and how it affects, future plans. And then we'll go to our Quizlet. So, okay. Banking. So let's talk about the actual definition of banking. So it refers to businesses conducted or services offered by a bank, such as deposits, providing loans, and managing financial transactions. So there are 3 different types of banks. There's commercial banks, investment banks, and central banks, which all serve different purposes. So commercial banks are more of your general bank that your parents have, what they use their credit cards for, what you guys use at HEB or like Costco, I guess. This is basically like for the public and businesses, but mostly just like public uses commercial banks. Investment banks assist companies in raising capital, underwriting, and providing advisory services for mergers and acquisitions. So this is more for high-profile companies who want to merge with others or just want to keep track of their assets with like a better tracked, financial officer. Central banks oversee the monetary system of and policy of a country and manage currency issuance and regulate commercial banks. So you can think of this as the Federal Reserve, European Central Bank. So this has more to do with the country and doesn't have a lot to do with us. I guess, it doesn't affect us a lot. Let's talk about the role of financial institutions. So there's three main roles. So there's bank functions such as having loans, safe deposits, savings accounts, as well as investment opportunities like we talked about before. And this all helps in facilitating financial transactions and providing liquidity to the market. So basically, this is helping our country's financial market as well as just helping you as a person achieve anything such as receiving loans for cars, houses, or anything else. Next, we have customer services. So banks offer various services to customers, including checking accounts, ATM access, and online banking, making convenient to manage personal finances and conduct transactions. So this is just for you as a customer, just services that can aid you in any purchases or anything else. Such as like I'm sure if you have any problems with your credit card, you call your banking company and ask them all your questions. So that's customer services. And then we have community impact. So banks deploy significant capital to serve their customers and communities, generating income that is subject to tax and contributing to economic growth. So I don't know if this happens everywhere, but I know a lot of like banks or communities, they match people's donations in their community. Like if an employee were to donate like $100, the bank would match that as well. So that's part of helping their community. And any income that they generate, so if you open a bank account and they charge you $250 to open it, let's say, that money is still subject to tax, even though it's like part of their business. Okay. So understanding financial markets. So financial markets are platforms where buyers and sellers engage in the trade of financial assets like stocks, bonds, currencies, and derivatives. So a few examples of these markets are the stock market, which facilitates the buying and selling of company shares. A lot of companies have these, such as Amazon, PayPal, Visa, just a few companies that have stocks open to the public to buy and trade. There's bond markets where participants buy and sell debt securities, primarily government and corporate bonds. So the difference between a stock and a bond is that a stock is unpredictable and its value could rapidly increase or decrease, while a bond is something that just increases over time or doesn't increase at all, but usually it's increasing. And then we have the Forex market. So this is the global marketplace for exchanging national currencies. So when you go to an airport, like an international airport from different countries, and let's say you have the US dollar and you're in India, for example, you would want to convert that to rupees, or if you were in the UK, pounds. So that's basically what that is. So let's talk about understanding different types of bank accounts. So there's three different type of main bank accounts that you can open within your bank. There's a savings account, checking account, and interest and fees. A savings account is basically where you deposit money that earns interest over an extended period of time. So I think my parents set up one for me for my college. So they have a savings account where they just deposit money every month going towards my college like fund and everything, and it gains interest over time. Usually people don't withdraw out of this until they like reach whatever like a certain amount that they have. A checking account is used for like your daily transactions. So if you go shopping, that's the card you're using, and that's the account they're pulling it out of. They won't pull it out of a savings account or anything. It'll be out of your like main bank account that you like have with the bank and are using for your transactions. Then we have interest and fees. So banks pay interest on savings account and may charge fees for checking accounts. So it's important to understand the terms and conditions of each account. So for a savings account, let's say if you open one, you'll probably be charged, like for any bank, you'll be charged money to be opening an account and joining that bank. And I know certain banks have a minimum number that you have to like put into your account. I think for some banks it's like $2,000 that you need to have an account or something. But all of that money and everything is subject to like taxes and whatnot. So the importance of budgeting, like financial planning is a huge, huge thing because even though you think like you have a lot of money right now, later in the future, if you don't start saving money and you don't have like the funds required, it's gonna be super difficult for you to like manage and plan that out. So there's a bunch of saving strategies such as I think right now a bunch of banks have like online apps where you can get an online person like an online person to help you with like setting your weekly budget and everything like that. So having that will help you in the long term, even if it seems a little silly now. Um, it's really worth it. You can also start saving as a student. Currently, one of my friends, she works at the hospital and I think she earns like $200 per week. So she's starting to put that in a savings account, and over 3 years with the amount she's invested, she's gonna grow with like $500 over the next 3 years. So just putting money in there and leaving it to sit can accumulate a lot of money as well. Credit management. So learning to budget effectively is essential for building a strong financial foundation and managing credit responsibly. So we're going to talk about credit later, but essentially, this is what your bank is checking to see if you're a good or a bad credit risk, as in if you are worth the risk in giving you loan. Because these people at the bank do not know if you're like a good or honest person, even though you might know, like, of course I'll return the money. It's not something that everybody knows, and your credit is basically an indicator on if you are worth the hassle or not. Okay, banking security and fraud prevention. So 3 ways your bank maintains security and make sure that no fraud is happening within the bank is through online security. So you should be aware of the importance of protecting your personal and financial information when using online banking services to prevent identity theft and fraud. So I know a lot of people, I certainly struggle with this, but having the same password for multiple accounts is something that actually leads to a lot of identity theft and fraud. So I think last week I got an email saying that something was going on with my Instagram account. So I had to, change my passwords and everything along with my email because all of them were the same. So obviously if one end is being cracked through, then there's so many other accounts that a hacker can get to. And recognizing scams. So that's super important. I think the other day there was this email saying, "Oh, all your student loans have been revoked." I don't know, like they've been paid for, but I don't have any student loans. I'm still a student. So basically just recognizing things and understanding the process of appeal. So even if you did get an offer or something, doing the background research beforehand and looking through, oh, is this the actual process? Would a bank actually reach out to me through email and send me a link or something? Is that something they would do? And also following up with your banking company through their online services is super important as well. If you have some suspicious transactions, you should immediately report this to your bank, because if you were to have one of your bank accounts compromised and someone was making purchases for you, the sooner you get it appealed by your bank, so to make sure that none of those purchases are being charged to you, and it'll be just written off to insurance or something. So that's super important. And also just safeguarding your personal finances. I know a lot of people put lots of cash lying around. Um not good. Always make sure that you're like you don't have too much cash on hand and that you're not withdrawing too much at like one time. I think the banks have something in place where you can't draw more than a certain amount of money out at a time. So let me check the Q&A thing. So if you guys have any questions about what I've said so far, please put them in the chat and I'll go through them. Okay, I don't think anybody has any questions, so I guess we'll move on. Okay, let's move on to section 2. So this is more about taxation and financial institutions again. So understanding bank accounts. So there's bank taxation. So financial institutions such as your bank are subject to various taxes, including, oh, wait, I guess there's a question. One sec. What is the usual interest rate for a savings account? So you can actually negotiate your interest rate by your credit score. So if you have a good credit score, you can get a higher interest rate. I think the highest I've seen personally is like a 4% interest rate per year. But it might not seem like a lot, but when you're investing like thousands and thousands of dollars, it does add up over time. And with regular investments, it should also go up as well. Any other questions? Okay, no problem. So let's go back to it. There's income tax, bank taxes, and property taxes, which are levied on the capital at risk of the institutions to regulate their financial activity. So based on the risk they're taking, the amount of like money they're taxing fluctuates. This is more probably because if you're a higher risk, they want to ensure there's like more money that's like actually like there and going to them. Tax compliance. Banks must comply with federal and state tax regulations, including paying quarterly estimated taxes and self-employment taxes on income generated from their operations. So any and all money that a bank earns has to be complying with the federal and state tax regulations, essentially. And some of that includes, quarterly estimated taxes and other stuff. So understanding the impact of taxation on financial institutions is essential for you guys to understand the broader economic regulatory aspects of the banking industry. So just understanding all of this is pretty important later on in the future when you yourself has to, pay taxes, or if you just like as a citizen, knowing where your money is going, why it's going is pretty important knowledge. So there's interest, income taxation, and financial literacy. This part isn't that important. Interest earned from savings account is subject to taxation and must be reported on annual tax returns, impacting the overall return on your savings. So let's say you invested $100 into your savings account with a 5% interest rate. By the end of the year, for 1 year, you'll probably have $105, but that $5 is subject to tax. So what you're getting is going to be more like $2 or like $102 in total. So basically, it's not just like a lump sum of money that you invest and you get a lot of. You still need to pay your taxes on that. You guys understanding financial literacy is pretty important just to have security on like your personal finances and making sure that no one's scamming you guys or getting higher interest rates, because your lack of financial, knowledge shouldn't be what gets you to pay more. Okay, let's go. Financial literacy and tax planning. So tax planning, did I go over this? No, I didn't. Tax planning strategies, such as maximizing deductions and credits, can help you minimize your tax liabilities and make informed financial decisions. So I think the other day, one of my friends, she donated like an old car to a charity. I think it got written off, so she didn't have to pay like a certain amount of like taxes. So just looking at some of opportunities like that, I think when companies like invest in, foundations or charities, that also comes off as like a write-off on their taxes. So maximizing that to the best of your ability so you don't have to pay as much money in like a lump sum. Taxation and investments. So understanding the tax implication of different investment options such as stocks, bonds, and mutual funds is pretty important because each of these is subject to like different taxes. I'm sure if you have like it's like pretty tricky with stocks especially because that's money that you have but can't be taxed on yet until you actually sell your stocks. So reading up on that and making sure that you have full knowledge of that is pretty important. And future financial planning. So developing a foundational understanding of taxation and financial literacy can prepare you guys for financial responsibilities and empower you guys to make financial decisions. So let's say you in the future want to buy a house. You need to have a good credit score. So you planning that out, paying your bank dues on time, always spending within your budget, not overdrawing, and just like not getting any like, arrest warrants out. Just thinking about your future from the start is super important because in the future, all of these things can affect your ability to get the things that you want. Okay, so we're at section 3 now. Any other questions? I'll wait a minute to see.
I think there's a question in the Q&A.
Okay.
I can read it for you. It says, oh, give me a second. Oh, it says this kind of blends into section 1, but do you think the AI planners for financial budgeting is good or no?
To be honest, I think it's really up to you to budget in a way that you want. I feel like AI doesn't really do a just job of like putting it into perspectives of you as a person. Because personally, I spend like so much on shopping. So if I had $500 and there was only like $50 in shopping, obviously it wouldn't be enough for me. But like mathematically, like whatever the AI is working with, that could be like the only amount that fits. So I think it's up to your discretion, but of course, like having that base level of just like splitting money, I think it's a pretty good thing. Yep. Any other questions? Okay, I don't think so. Okay, so let's go on to section 3. So building credit scores. So first, let's just like talk about credit and what it is. So your debit card is linked actually direct to your account, and that's what you're like drawing out of the money you have. A credit card is basically you have a certain amount of money approved that you're paying for, and then at the end of the month, you pay your credit card bill. So a lot of people have auto pays for their credit card bill so that they don't have to pay later on, like for every single purchase. And debit cards, honestly, I don't know what they're like typically used for. I think these are mostly used for like large purchases such as like a house, like along with your loan. So it's like automatically deducted. I don't think people use their credit cards for a house. Yeah. So it's credit cards are usually useful for a larger purchases or emergencies when you don't have the money on hand right there. So let's say you didn't have like $100 for groceries in your account at that moment, but in the future, like you're gonna make that $100 by the end of the month. So a credit card helps because the bank approved that amount, and then later on you can pay it. Depending on your credit score, the amount that you're approved for goes up like over time. So let's say you're like going to college and you just got your first card. The amount that you're being like allowed to use before you have to pay is significantly lower than someone with like a full-time job who's been like with the bank for 10 years. So obviously like the amount that you're okay for changes based on the amount of time you've had the card and like your age. So a credit score is basically just like something like I explained earlier is that your banks look at to see if you're a good or bad credit, like a good or bad credit risk for loans, mortgages, or anything else. You guys should definitely go a little deeper into credit reporting agencies and such and how like those behaviors like paying your bills on time, managing debt impact your credit score. So obviously if you have paid off a loan earlier on, so let's say you bought a car like 10 years ago and it's all paid off, that's going to make your credit score go higher because the bank knows that you pay your bills on time, that you can work hard enough to pay off your bills. A credit score impact, basically, I think when you first open a bank account, your credit score goes super low because they do a hard check on your social security, which in turn like impacts your like overall score at the start. But then later on, like through the years of you like having good credit skills, I guess, paying your bills on time, having little to no debt, and just maintaining healthy credit profiles, that's gonna help you build your score for bigger purchases. So establishing credit history. So credit building strategies you can do right now. I think this is only applicable for some banks, but you can become an authorized user on your family member's credit card or apply for a secured credit card, which can help you like start your journey. It's actually pretty important like which company you start your journey off with, because that first card is what you're gonna get like the most deals, the most benefit from. So choosing a good bank to start off your first card is really important. So credit utilization. The importance of maintaining a low credit card balance relative to their credit limits is crucial for building strong credit profiles. So you spending $20,000 on your credit card when you only have 16,000 in your account is not good credit responsibility, I guess. You should be spending within your means on your credit card and only in situations where like you actually have to. I've heard like a lot of people saying that they used so much money on their cards that they couldn't pay off, and it really plummeted their score, and it took years for them to build it back up. So that's why a lot of people like tell you, oh, be super careful what you use on the card. But as long as you know that you can make that money and it isn't like above your means, you should like go for it. Credit monitoring. So monitoring your credit reports regularly and identifying any errors or discrepancies can help you safeguard your credit scores and address potential issues proactively. So you shouldn't be waiting for the bank to tell you, oh, sorry, you made a mistake. That is something you should be looking for and checking through so that you can get it fixed immediately so it doesn't affect you. I mean, once like a mistake happens, it's pretty hard for like, it takes a long time to get it fixed. And in the meantime, like anything could happen, right? Okay, credit score management. So payment history, credit education, and credit score improvement. So emphasizing the significance of consistent on-time payments for bills and debts and maintaining positive credit scores and avoiding negative impacts on credit profiles. So again, like what I was saying earlier, when they do like a hard background check or inquiry on your profile, it plummets your credit score. So obviously you do not want that. So having your things on time is very important. Credit education, this is just again knowing what it should be. So having a good idea of what your credit reporting should look like, having like a rough idea of what your expenses should be is pretty important, so that when you look through your things, you know, okay, I know this is supposed to be here. I know this isn't supposed to. Let me go fix it. Again, just acting proactively. Credit score improvement. So students like in college should, learn about strategies like these to improve their credit score, such as addressing like any bills that you haven't paid, reducing any debt that you have, like your student loans. I think a lot of people take that on a credit. Yeah, I think so. People sometimes take that on their own card, so they have to pay those off. So addressing all your debt and everything is super important. Long-term financial planning. So credit score and financial goals. having a good idea of your long-term goals again is super important because you never know what could happen. So having like the knowledge, okay, in the future I want to buy a car. In the future I want to buy a home. Like having this knowledge is important so you know where to start saving, when to start like improving your credit score so you can get better um interest rates for your loan, a lower interest rate for your loan. I know recently here in Texas, like for your home loans, the interest rates have been skyrocketing, which affects you a lot because in the long term, let's say you have like a $600,000 loan, but your interest rate is like 5%. That's like so much more money that you have to pay on top of your 600,000, which in most terms people take 30-year loans. So just like having a good credit score can bring that number down. Because people know you're a good credit risk, they'll usually offer you better rates, so you don't have to pay as much interest. Credit and employment. So having employment opportunities and career advancement can also show implications of credit management for future prospects. So showing them that you have like the potential to like increase like your position in your field, I should say, can also be like, I'm gonna make more money in the future to your bank. So that's like better for them, right? Again, financial empowerment, just knowing the tools and knowledge that you should have to like help you move ahead and seek, more understanding about everything. So I know a lot of people have financial advisors. I don't know if it's like too popular actually, but I know a few people who have financial advisors who help them just like with their stock portfolio to make sure, they don't have any bad stocks and, if it's time to sell or just like budgeting. Again, you can also just like get someone, a physical person to help you budget. It's so much more common these days because with like a lot of AI, people are like trying to show that their skills can do better and that they can make it more customized towards you than like an AI could. And that's it. So I'll take any questions about the whole thing. After this, we can do a quick quizzes and yeah. So let me see if there's any questions. How many bank accounts cards should we open and which banks would you recommend? To be honest, don't open too many. At the start off with like a few, and once you build your credit score, you're gonna be getting offers from other banks to apply for their cards. So all in good time. Once you like start doing good habits and everything, you'll start getting offers from banks. And to be honest, I don't know what banks, but I know a few popular ones here are Bank of America, Chase. Yeah, I think those are two banks that I personally like. Any other questions? Um, I think there's a few in the Q&A box, but I can't click on it. Give me a sec.
Oh, I can say them for you if you want. Basically, the first
Okay.
one is, are there risks involved with using credit cards, especially for young adults?
So for you as a young adult, if you're not paying your bills on time per se, I think that's like a huge risk that could really affect you. Also, I guess if you're gonna take an apartment, this is good knowledge to have, but if your name is on the lease and I don't know, someone you're rooming with isn't and they don't pay their share, that also affects your credit score. So just like any payments, everything that has your name on it, even if it's not like what you're responsible for, if the person that you're like has to pay for it isn't paying, definitely pay for it because it's gonna cause more like damage than good. Unless it's something like out of your reach, then you should definitely like not pay for it, figure out another way. But that's why it's like super important to choose like good roommates and whatnot, because that also affects you in the future.
Um, the next question is, how often should I change my password to ensure security?
Honestly, I think every like half year, 2 year, yeah, I think like half a year to a year is when you should be changing your passwords. Even though it's like pretty hard to memorize them, it's all like pretty important. Like I don't know. I think if you have the same password for everything or you're not changing it frequently enough, or if it's something like super simple, it's gonna make it like easier for people to track your accounts and easier to do identity theft. So just look out for that. I think like a lot of places make sure you have like a secure password, like bank accounts and everything. But alongside that, like your personal email, everything, these are all still super important, even if it's not like related to finances. These still your email and everything, they still contain private information and could, be compromised. So always, keep that in mind.
Wait, a follow-up question that I just had, like I thought of was, do you think like like saving your password on your computer, either using like the Google like saving password feature, do you think that's a security hazard for like your online passwords?
I mean, honestly, if I guess that depends. I mean, if someone's like going through your computer and you have the password saved,
Hmm.
obviously that's like not good. So I don't think saving important passwords is like a good thing. So maybe like for something less important, like your Canva account or something, maybe have the password saved. But for your bank account, just like take the extra 1 minute to type your password in.
Hmm. And then the last question here is, do you think sustainability plays a role currently for banks? So they have digital banking and etc.
I mean, I think so. I think maybe it's not for a sustainable reason, more of like an efficiency reason that they did online and stuff. But I guess it's also like useful to the environment, like having less paper transactions and stuff.
Hmm. Okay. I think that's all the questions right now. If you want to just like start the quiz that you have prepared, maybe more
Yeah,
questions will start flowing in after that. Okay, start
yeah,
the
of course. This is just basic like banks things that I found. So, you know, you might not find all the information on this presentation, but try your best. Let's see like what you've gained or what you haven't. If you have any questions, drop it in the chat and I'll look through it or, yeah. Okay. I think y'all can see the game code right now, right?
Yeah, it's visible.
Okay, let me open it. Let me see if this works real quick. Okay, I think this is just a play on your own game. So if everybody can see this code over here, type that into your join my quiz and play. Tell me if it's not working. I'll like try to fix it. Is it working for you guys? Okay, that's good. I guess we'll just stay on for like another 10 minutes till you guys are like done and we can like close off.
Okay, that sounds cool.
Okay. Did everybody get the link or the join code? Okay, well, I don't think all of you can answer, but I'm gonna assume you guys did, and I'm gonna stop sharing my screen.
Um, Ansika, I think there are a few questions in the Q&A box.
Okay, I'll go over them. Okay. Um, Give me a second. I'll figure it out.
Do you want me to just say it to you?
Yeah.
Okay.
Please.
Yeah, no worries. So the first one says, how do you think small businesses can improve their credit scores? I own one. That's what that said.
Small businesses. I think I think just paying your bills on time, honestly, because if you have any like debt from opening your small business, pay that off. Any transactions that you're making, make sure like with that card, make sure they're paid on time. Um, I guess until you start paying for things, you can't really improve it. Like making money and then having it in an account and using that money is like pretty different. So until you actually start using the card, I think just saving the money in a savings account with interest, I guess, like with the parents' help, and then later on moving that money to your bank account and making it on payments. I think the more you use it, like the better for a card.
Okay. The next question is, do you think digital banking has kind of changed customer expectations, like faster responses and etc.?
Um, yeah, I think so. I mean, now we have like a help center to like, call to. I think there's like this thing where you can like call a live agent and like talk to them about your finances. Also, just like emailing and having like calls with your agent. I think here that's like a lot of like what a lot of people do, just like hopping on calls with like one of their financial agents and talking about them or like someone from the bank. I think that's only something you do though, like when you have like a higher level card, like a platinum card or something, like services that come with that. But I think so, yeah.
Hmm. And then the last question is, do schools in America teach this stuff?
No. I mean, I guess if you take like last year I took business, finance, and marketing. It's a course here in high school. To be honest, I didn't really learn anything in that class except giving presentations, but it's okay. I think that's why we have WISE, because not every school offers knowledge like this. So having somewhere else to, get full like guidance about it and just like asking questions about it is pretty important. So
hmm Yeah, that's great. Yeah, for me too. We don't have these type of classes either. I think the most basic we would have is like marketing or like economics, which doesn't touch on anything regarding finance really. Yeah. Okay,
yeah, no.
so that's like another full of questions, but there are no more questions left. I
Okay.
think like just like because there are still people here, like if you didn't get the quiz join in code, you can just type it in the chat and maybe Ansika can just like put it there. But if there's no reply, I'm assuming everyone got it. And this kind of quiz, you can just either do it right now or on your own time as well, because it's kind of like at your own pace anyways. And you can just
Yeah.
view it. Also, this recording will once again be posted onto the website, so you can just like review the information from the slide Ansika's presentation as well. So if there aren't any more questions and everyone got the quiz, I think we can kind of conclude our webinar for today.
Oh,
So
wait. Can I
yeah,
ask something?
yeah, of course.
Wait, so just a question, where are you guys like all joining from? Like I'm joining from the US. I know Queenie's joining from like Canada, so just a question.
Yeah,
Unless
unless they're not really active right now, you can type
yeah.
the chat. I think a few people.
If you guys are though, answer and that'll be cool.
I'm assuming most of them are from like the
I'm
North.
assuming they're off, yeah.
Yeah, I think they're not on there like maybe they're like doing the quiz or something and they can't.
Maybe they're like super focused.
Yeah, I think they're probably all in like the North America regions because yeah, probably.
Yeah.
Yeah.
Okay.
Anyways, so just to kind of conclude today's webinar, I want once again thank you so much for hosting, kind of leading today's webinar, and I think this information is once again super important. Just like basic knowledge, like these are all intro classes as they're led by students, but I think it's still like just knowing the basics is very essential just to like start diving into like the more complicated aspects of these areas. So of course, thank you so much for giving your own insights as well, your own personal stories, and also providing some essential information. Yeah, so once again, I'm just gonna let everyone know this information will be posted on the website. You have any information, feel free to contact us through our email, our Instagram, and we also have WeChat, so you could do that for those who are not in the North American regions. But yeah, so that'll be the conclusion of today's webinar. Information will be posted about future sessions. So thank you so much, everyone, for coming. And also, of course, thank you so much, Ansika, for leading today's webinar. Yeah. Okay, that's it, everyone. Thank you so much for today.
You.
Okay, bye.